Hello viewers and welcome back to Starke TV. You're joining me, Natalie MacDonald, for yet another exclusive interview. Joining me in the studio now to discuss the risk and insurance management market is Patrick Starke of Starke Cie. Patrick, thank you so much for coming in today.
Thanks for having me.
Okay, so firstly, what motivated you to start up your own business?
In today's global economy, risks did not decrease, it's just the contrary. So small and medium-sized enterprises often have not the capability to maintain their own risk and insurance management system. And then when we talk about risk and insurance, the focus should be not the sale of insurance. It should be a consolidated and systematic consulting approach. And third, often company owners in the middle market are fatally wrong about one serious misunderstanding. Small and medium-sized enterprises do often not have the size and financial capability to have their own risk and insurance department. So brokers and insurance agents also consult them in risk and insurance matters. And that's for us a slight contradiction, because of the fact that insurance brokers and agents are paid by insurance companies on a commission basis. So there is a slight conflict of interest, which we see. If insurance companies, for example, raise the premium by 20%, also the insurance broker gets a 20% income increase. And that may be a slight conflict of interest.
So is it possible then to over-insure against risk, in your view?
Yes, of course, that's possible. If, for example, the insurance reaches a premium level which is too high, so that you have to question the competitiveness of a product, that would be a clear case of overinsurance. The problem is that the overinsurance can turn the insurance into a real cost trap. So on the other hand, really severe claims may rest uninsured. Consultants like us are working, however, independently. So if we advise a client, we have to show chances for adequate protection and of course also see that the risks are in capability to keep them in the balance sheet of the customer. And then of course a consultant must analyze risks and see that he finds adequate measures to protect the client, especially his balance sheet.
Patrick, it was that second aspect that you mentioned that I just want to pick up on for a moment. So you offer advice as an intentional, independent expert to your clients.
Yeah, that's true. We offer our clients consulting services based on know-how which we gained in nearly 3 decades, but we do not sell insurances.
Is independency then insofar an important differentiator in your business model, do you feel?
Yes, indeed. That's our highest maxim, to stay independent of insurance providers and brokers. But there is another aspect which we see is quite often underestimated by entrepreneurs. And perhaps it's not often enough picked out as an important central theme. The aspect is that one cannot protect against each and every risk simply by insurance. So this aspect turned out very clear when we conducted and initiated a survey in 2011 together with the University of Basel, and it was found out that it's widely unknown by many entrepreneurs that from all risks which an enterprise could be hit by, there is only a very small portion, which is less than 20% actually, which is insurable at all.
So does that mean that the rest of the 80% becomes a potential loss on one's own balance sheet then?
Basically, yes. But there arise 2 areas which I need to highlight more, which we actually regard as core of what we offer to our clients. Most important is that insurance is by far not the only option to reduce risks. First, you need to identify risks. You have to value them, and you have to find adequate measures to protect against those risks. These measures could, for example, be an improved liability agreement for suppliers or customers of the client, or a crisis or business continuity management concept put into place. But it may also be that we have to advise clients actually against a certain business opportunity. That's of course not our goal, but it may be the outcome of a strictly fair and independent consulting approach. And then of course the residual risk has to be in capability of the client's risk-bearing ability. And that's the point.
You spoke about 2 areas of activity. Does your consulting also lead to a cost reduction for risk, which your clients want to insure?
Yes, that's another important topic indeed. Because it's not for granted that those 20% insurable risks are indeed insured at best conditions. So our target is to analyze those 20% and then identify potential for further optimization, which normally results in a significant further cost reduction. But if we talk about cost reduction and the total cost of risk split, we do not only talk about insurance premiums, which is of course an important fact, but also you have to account for uninsured claims, you have to account for deductibles, and of course the handling costs for those cases. So altogether makes the cost of risk split, and we try to optimize on that basis. Now, in our daily practice, we ascertain much too often that companies tend to insure at an all-inclusive mentality, which means they have insurance with no or very low deductibles. And so, on the other hand, there may be no cover for real fatal serious claims which could ruin a company. So we think it's not a smart idea to save premiums on the high end. And what is really widely unknown is that insurance is quite expensive on the low end, where you have no deductible or very low deductible, which is widely known that claims to insure at the frequency level are quite expensive. Because extent and number of claims are quite well known, and insurers normally calculate, together with the claims extent, also costs and of course a profit margin with it. So claims in the frequency level normally could be borne by companies quite easily themselves. And of course, you can then save a lot of premium on that basis, which you could use to protect yourself on the high end.
If I could ask you then finally to quickly summarize the most important goals for enterprise with regard to their risk and insurance management, how would you do that?
First, it's very important to prevent companies to feel misleadingly safe, because they just may focus on the 20% insurable risks. Second, it is very important also to find adequate protection measures for the 80% non-insurable risks. And finally, it makes economic sense to also address the 20% insurable risks if they are really insured at an optimized level.
Patrick, thank you so much for coming in and sharing your expertise with us. We appreciate it.
Thank you.
Well, viewers, that's all we've got time for. Thanks for watching.